There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on the 7th of August. I'm Nadine Blaney.
I'm Juliette Sarli, and tomorrow, 8th of the 8th, very auspicious day in Asia. Not so fortunate today for the market though, Nadine. We did retreat from those records. It could have been a lot worse though, given the overall momentum that you have been seeing in these markets, breaking through 8,800 points yesterday on the ASX 200, retreating today, of course, considering what we're seeing in terms of concerns about tariffs too.
Yeah, and when I look at the market map, it's kind of a patchwork quilt is how I'd describe it. You know, you've got some pockets in the banks that are doing okay, others not. Same with the miners, gold looking quite strong, consumer discretionary as well. We'll take you through the sectors in just a tick. But yeah, it appears as if there's ever-changing narrative when it comes to the tariff regime coming from Trump. So yeah, another day, another tariff.
Indeed, and particularly on India. I had a great chat to Nathan Somasundaram earlier about this and the fact that he was saying, look, a lot of these countries aren't as concerned as perhaps Trump thinks that they will be. India is just going to move into that Asia bloc trade more with China, perhaps, in his view. You can find that online, of course. And it's probably more likely going to hurt the American consumer and lead to higher inflation.
Yeah, but that, really causing a conundrum for the U.S. Central Bank. We continue to talk rate cuts coming there. I saw a note from CBA today. They said that 25 basis point cut is on the cards for the RBA's meeting next week. Safe to say, though, that we underperformed many Asian region indices as we treaded water on this Thursday. And I'll note that the U.S. futures are higher at this point in time as well.
And speaking of cutting, London calling, if you will, the BOE expected to cut tonight. Let's have a look at these sectors.
Yeah, so here's healthcare. And again, there's that mixed picture. Cochlear higher, Ansell up by 0.7% to $31.04, but CSL weighing on the market overall.
Having a look as well at some of the gold players. Well, that's where spot gold is tracking. Of course, we have been looking at the gold futures. Investors booking profits after prices hit a near 2-week high.
And consumer discretionary. Take a look here. It's an interesting sort of mix of companies there under consumer discretionary. We did have some good commentary coming from Alvia Asset Partners, correct, on Nick Scali today.
Yes.
Nick Scali finishing up by about 0.5%.
All right, let's have a look at some of the stories. AMP had a good day, up 5%, underlying net profit up 9% from the prior period to $131 million.
Light & Wonder will trade solely on the ASX from November. That was part of its announcement. The results did disappoint, slightly down by 2.2%.
Yeah, I think revenue was pretty flat there. They said that there's a lot of concerns in Asia in particular. Mineral Resources appointed Ross Carroll to its remuneration committee. Linden also in focus. That was in focus yesterday too, wasn't it?
Yeah, so it did a deal with Iluka yesterday. Linden says the proceedings against it by Malawi, by Deep Blue Sea, have been dismissed in its entirety, with full costs being awarded in favor of Linden.
All right, and having a look as well, the ASX here. Now this is huge, right? Yesterday, that mea culpa where they named TPG Telecom instead of TPG Capital as the bidder for Infomedia, having the biggest fall since the depths of the GFC as investors dump the stock. The ASX could spend up to $35 million responding to governance and operational failings amid threats to its monopoly.
Yeah, ASX is reporting as well, obviously, this month. I did request an interview with Helen Lofthouse, but too busy to speak with us. There's TPG recovering, I guess, slightly up by about 0.8%.
And I wanted to bring this chart to us as well. Look, this is a long-term chart of Domain. It's its last day trading today because the $3.2 billion takeover by the US-based CoStar has become legally effective. Domain lodged court orders with the corporate regulator, and trading in Domain shares will be suspended now.
Yeah. Okay. See you later, Domain. Nice knowing you. Finishing at $4.43. Yeah. REA Group reported yesterday as well. It was the stock of the day. It'll be interesting to see how the fight goes on between those two rivals from here.
Yeah. All right. Let's welcome Nathan Somasundaram from Deep Data Analytics. And Nathan, probably no surprise we had a retreat today after records yesterday.
Yeah, and when you got Mr. Trump running around, you can never know what day-to-day move are going to be.
Yeah, Nathan, look, you don't mind me saying that you're a bit bearish sometimes, and sometimes it feels as if you don't have a lot of people on your side. But today on the call, Andrew Coleman from Tip Group, look, he is feeling that this music is going to stop sometime soon. Are you expecting? What are you expecting to come? What signs should we be looking out for that will tell us that, the party's almost over?
Yeah, I mean, timing is always hard. And that's, that's what I love about the whole concept of trying to manage money and trying to invest in a market, because whether you're bullish or bearish, investors don't care. You still need to outperform. So in that context, I'm bearish, but we're killing it. I'm more than happy. I mean, we're long gold stocks. We're long Linus. We're long Telstra. We're long food stocks. We're long energy stocks. They're all running. It's never been great to be bearish. So being bearish doesn't mean that you're being short the thematics. You still pick the thematics and you still have to be invested. The question is, you kind of curb where you shouldn't be and where you should be. The sector selection becomes massive. And so that's the difference. So for me, yes, we think the economies are overcooked, right? The economies have been held up by government spending. Now the governments are trying to cut spending, and inflation is a problem. Irrespective of what Mr. Trump does from here, he's got a problem of the bond market not going to buy into what the Fed is going to do. So even if the Fed cuts rates, the risk is the bond yields might go higher because the US debt is growing even faster than it was before. So there's huge issues here. Now, why is the market up? It's mainly passive money. We've had 2 to 3 years of money going from active to passive. Hence why most fund managers that are listed in the market are trading at multi-year lows. So the guys in the passive money and massive buybacks in the US, especially by the techs, have driven the market to 20-year high multiples. Can that be sustained? It can never be sustained over the long term. So at some point, something's going to break. We've seen the non-farm payroll and the restatement in non-farm payroll. That's telling you the US economy is in trouble because the employment data is usually a laggard. So if the employment data is rolling over, we've got issues. Hence, you're getting all these random tariffs on a daily, weekly basis. So I think it's very hard to pick what's going to happen that'll break it. Something usually breaks, and it usually is some left field event. That's not what you target on. You target on which sectors are going to do well, even in this weak cycle, and you stay away from the sectors that's probably going to get hit the hardest.
All right, so you mentioned some of the sectors that you are looking at, and interestingly on that point, I was at a lunch with Schroders today as well. They're saying the same thing, that a lot of investors are underestimating the risk of a US slowdown, markets being very complacent. And to be fair, Nathan, you've said that for some time, haven't you? What about in terms of where we look for some opportunity in reporting season? Have you been impressed so far with what we've heard?
So far it's been pretty okay. I think it's holding up well. The common thematic you are beginning to hear is costs are going up, which is not really a surprise. Inflation is playing out. I know there's a lot of media spin on that, but the reality is inflation is high and it's rising. And I think that's going to be global, and US tariff uncertainty just will add to it. So in context, we've kind of picked, the inflation sectors, gold, energy, food, and has been pretty well performing. And but I think the interesting part in the US is they always under forecast. So they're currently running at about 80% beat rate. The average has been closer to 90%. So on a relative basis, US is actually not outperforming expectations. And if you think about it, they're at 20-year high multiple. You don't need them to just beat. You need them to slam expectations, because when you're at 20-year high multiples, you've got a decade of growth priced in. So you need a fair bit coming through.
Hey, Nathan, what do you make of the defense sector? Because while governments are going to be forced to pull back on spending, they're kind of being forced to spend more on their own defense. We saw Electro-Optic Systems this week absolutely tear after it signed that NATO deal. Is defense a thematic that you look upon favorably, or is it too hot?
Yeah, well, we were there when it was not so pretty. Austal has gone, I think we got in at $1.50, now it's $7. We were in Codan at $4 and it's now 22, 23. You've got numerous defense link stocks on absolute tear because markets assume that suddenly we're going to be in war forever. And that's the beauty of it. You go from pessimism that these companies are not going to do well at all to forever stocks. I think you've got to curb your expectations somewhere in the middle term. Right now, defense ETFs, it's a matter of rotation. So Americans were doing a lot of the spending, and Americans literally would just buy American weaponry. So the American companies did well. Now that Europeans are being forced to do, naturally, Europeans will stop buying American weaponry and buy European ones. So European defense started to run as well. So that cycle has pretty much been in play for the last couple of months, and I suspect that's got a bit of leg. But overall, in the defense side of things, I think that's a given thematic now. Most people are in the price. The multiples are high. I always find it funny when, tiny companies with a massive market cap, I mean, their revenue is tiny. They got billions in market cap. Suddenly write a small contract and everyone gets overly excited. That's usually a sign that the market is too hot. So I'm not chasing in defense. We're actually taking profit in defense stocks because I think, when it was unloved, nobody wanted it. Now everyone's in it.
And you made 5 times on Codan. All right, and 7 times on the other one you mentioned. Was that Austal? I want to get your quick thoughts on the ASX as well. I mean, there's huge, as the young people say, my bad. But Jim Chalmers, the treasurer, also trying to end its monopoly.
Yeah, ASX is an interesting one. I was actually looking at that TPG going, you know what, as a data person, I can see how it can get merged up. Back in the day when we used to not have as much high tech, I used to hate these code changes. It used to destroy the systems. So I have some sympathy for ASX. Look, ASX is a defensive stock. It's more or less a monopoly asset, but CBOE is now catching up quite well. It's well funded. It's a proper threat. And I think the monopoly is gone. There was always a talk about potential takeover, and London Stock Exchange was a potential candidate for that because they've got great systems. It'll make sense because Europeans want to invest into Asian exposure, and the Australian market offers that. So I do like the stock. It looks, it goes from everyone loves it to it's a complete disaster. So you have to be there. I'll give you a simple explanation. When this thing is around 50 to 55, you buy it. When it's over $70, you sell it. And it's one of those ones that Gaurav used to hate when I say some of these stupid rules, but it's a basic theory of market gets overly excited and overly pessimistic. It's a utility. At the end of the day, it's a cyclical play. When there's a lot of IPOs, a lot of transactions, they do well. They're not the best at it, but what are you going to do? They dominate the market. So when it gets down to $50, take a look. Till then, you don't need to look at it.
Well, Nathan, thanks. Breath of fresh air. Nice to speak with you. Always enjoy your commentary. Nathan Somasundaram from Deep Data Analytics there.
Now, you were on the call.
Tell us
what you were talking about.
Well, we talked about a lot, actually, and I was thinking when we talked about that, my bad, by the ASX. My bad. I was going on about ARB when it was actually AUB today. So everybody is fallible. All right. Stock of the day was Neuron Pharma. Did really well today. Put out a sales update on its debut product. Grady Wolf from Bell Direct. Andrew Coleman from Team Invest.
I am constantly impressed by Neuron. I think they've gone about their distribution partnership with Arcadium really, really well. because a lot of companies will test the waters and get their own marketing team out there, and why do that when you've obviously got the access to Arcadium? They've done a really good job there. Sales continue to grow. It's a first in class. They have other drug candidates ready to go soon. The Phelan-McDermid syndrome trials are underway right now. They've got, so the second drug candidate, Daybue just treats Rett syndrome, but the second drug candidate treats 4 neurodevelopmental disorders. So they're much bigger global addressable market. So we love it. We've had a buy on it for quite a while.
Look, it's way too early for me to have an opinion on it from anything other than gut feel, but you know, compared to most biotechs that we talk about, this is one that actually does make profit, that actually does have a product that's being sold, that is trading on a reasonable PE of sub 16 times compared to some of them we'll talk about later today where triple digits would be small. You know, overall, if you're going to be playing in the biotech space, Neuren looks like one of the best you could be.
Double buys on this program today, Juliet, which is, you know, saying something when you've got Team Invest on, and I do say that with love.
All right, it was the younger Team Invest today. Let's have a look at the leaders on a down day. AMP, of course, we touched on that after its results, up 5%. A lot of resource stocks here too, a lot of the uranium players, and of course Neuren that we mentioned there, up 3.3%.
Yeah, Westgold Resources came out and upgraded, so that was looking pretty all day. Boss Energy was discussed on the call today. Boy, you see that on screen and you think, oh, not too bad, but we all know what happened last week with Boss Energy. Let's take a look at the laggards, and yeah, those that were dragging their feet today look no further than the ASX Limited, Clarity, News Corp in the wake of its update yesterday. Earnings per share growth set to drive returns, but not today.
Well, I think because it went up by almost 8% yesterday, right? Maybe a little bit of a pullback.
Yeah,
today.
UBS maintaining a buy on the stock regardless.
All right, let's have a look at the small end of town. E-Road there up 30%, 4D Medical, Waratah Minerals, Adveritas and Elsite.
You always get introduced to a few new companies here, don't we? Dateline Resources off by 8% to 12 cents per share, and Serco down by 4.4 to $2.59.
All right, tonight, the BOE decision, of course, as we mentioned, a cut very much expected. Non-farm productivity for June and consumer inflation expectations for July. A little bit of earnings as well.
Yeah, Eli Lilly, Toyota, Parker Hannifin, Motorola, Invistro. So we're sort of over a lot of the, you know, the big tech names, but we look forward to the retailers that are still to come as well.
Yeah, and I think we've got to remember Block as well, ConocoPhillips as well. So then tomorrow, locally, we'll get the follow-on effect of Block, which is on XYZ on our share price now, on our stock market, XYZ.
I was going to say XYZ.
Sorry, I did work for an American company for a long time. I'm trying to slap myself out of saying Z. QBE and Nick Scali as well.
Wish we could speak with Nick Scali. I'd be really interested to see how it's all going in the UK, but I guess we will get the update. We'll bring you all of that analysis throughout the day tomorrow again. So look, not the prettiest picture being painted by the end of the session. The S&P ASX 200 really mirroring what you see on your screen with the COB Australia Index ending at 8,831.
All right, we will see you bright and early for Friday tomorrow, 9:45. And we've got a great show on the last call at 3 p.m, you and I tomorrow as well.
Looking forward to that one. We'll see you then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.